Welcome back, everybody. Today we're going to go over Bitcoin in general, halvenings, the whole thing. We're going to talk about start to finish and talk about market cycles and where we are right now, where we could expect Bitcoin to go, and are we still on track for, say, stock to flow, or is there evidence for lengthening market cycles? If you do like this type of content, go ahead and give me a like and subscribe to the channel for more crypto news and content. Let's go ahead and get into it. We have our little co-pilot here, so bear with us. But this is the Bitcoin chart. Now, each line that we have here is representing the halvening. So hopefully you're not getting overwhelmed from the get-go here, but we'll get into each individual market cycle or halvening cycle and then talk about whether or not that's going to dictate future market cycles. Now, of course, I have my theories in everything. And again, stock to flow is, in addition, a theory. We don't have enough trading data to really tell us who's right or who's wrong. So if we take a look at the early days of Bitcoin, we see where it went up approximately 96,000%, then went down approximately 93% among 23 bars. So 23 weeks since we're looking at the weekly chart. So we see that go into another bull cycle of 106 weeks in general. Goes up approximately 60% from its all-time low, right? Then we went into this double peak here. So really, it depends on how you're measuring this. We're counting the double peak in one cycle. And in between these two cycles, we kind of had this happening. Now, the reason why things like the double peak might be an anomaly is because of how new Bitcoin was. You'll be able to see here that traditionally we see a much different price action for Bitcoin, but with how new it is and how much hype it would have gotten, the supply shock from the halvening, because it would have been the very first halvening, it would have been pretty drastic, which makes sense in driving up the price considering how small the market cap was and how the littlest thing could definitely drive up the price. So this here, the double peak here, absolutely makes sense with that in context. Then we do drop down approximately 83% among 58 weeks to get to the bottom of our next bear cycle. And this cycle is the first multi-year long bear cycle that we ever saw. Now, we did eventually pull out of this bear cycle, and midway through that pullout, we did have our halvening, and that was in July 2016. Shortly after that, we saw our dip and then our run up into the bull market that hit up to $19,000 for Bitcoin in 2017. Then in 2018, we saw our 84% drop, roughly give or take around 48 bars, so 48 weeks for that drop to the bottom of the next bear cycle. So into this next market cycle, we did see that initial pump up here. And then obviously we had our March capitulation. And then right after that, we did have our halvening. And again, shortly after our halvening, it did increase in price. Now, if we're following general stock to flow, most people will say that the market cycle is roughly 4 years because the halvening is 4 years. So that could be correct, but I want to give a couple of reasons why I think it might be different. So first off, we could absolutely hit stock to flow, be at roughly $116,000 Bitcoin, hitting our market peak, giving us approximately a 3,600% increase, which is shy of the 10,000% increase that we got in 2017. Now, we would expect that these market cycles would lower in the overall gains. We have seen that kind of traditionally if we look back. If we're counting this double peak, it is a bit of an anomaly, but generally you can see the increases will trend down. So we could say that midway through here, we're going to sometime hit a peak somewhere around by the end of year 2021. And then we're going to go through a somewhat 50 bar cycle, so 50 week cycle of going to the downward side, which could bring us down to as low as $19,000 Bitcoin, considering if this is our peak. If our peak is upwards to 120K. Now, that is like bare bones low. We don't have to hit that low. We did see it kind of hit down at that very, very bottom point of $3,000 Bitcoin, which was extremely low at the time, a super fire sale. I don't know that we're going to see a dip as dramatic as that, bringing us down to the absolute bottom. It doesn't have to happen that way, but at the end of the day, it has happened in history, so I can't say that it won't happen ever again. Now, the reason why I think this logic might be flawed is typically because we have the distance in the timeline of these market cycles kind of extending over time. And we kind of see that at a small scale. Like if we look at the first one, we see it went through for 40 bars The second one went through 106 bars. The third one went through 153 bars. We're talking about the bull cycles, by the way, from the bottom of the bear cycle to the market peak. And then we have an estimated 163 bars. Now, if we do look at these, we do see the bars increasing dramatically. Now, I've talked about this before, that I don't think we're going to end at 163 bars. I think we'll go much, much further and probably have a market peak somewhere around the 300,000 mark. Now, that would bring us to a market peak of sometime into 2022 and potentially even into 2023. Now, the reason why I say that is because we see the market peak gradually move closer and closer to the second halvening line. And I fully speculate, and I could be completely wrong in this, but I fully speculate that in some point in Bitcoin's future, we will see two halvenings in one market cycle. I think that we're going to have lengthening cycles over time, whereas yes, the halvenings will impact the cycle and impact Bitcoin's price, but it won't be the driving factor of how long that market cycle is. And also you have to keep in mind of this, what happens when all the Bitcoin are mined? When we have all 21 million Bitcoin mined at that point, then what is the halvening for? The halvening won't do anything. So at that point, what will Bitcoin follow? Now, that is a problem not for me or even my generation. It's likely that I'm most likely going to be dead by the time that happens. You know, considering that all the halvenings are done in 2100 or somewhere around there. So most likely that's a future problem, but I'm willing to speculate that within my life, we will at least see some market cycles with two halvenings within them. If not, that'll be a growing trend as market cycles get longer and longer. But of course, we could also see stock to flow. And I'm not negating that in one bit. It's as credible, if not a little bit more credible in the community at least, than lengthening market cycles. Now, this being said, none of this really matters when you think of cryptocurrency and Bitcoin as a whole compared to United States dollar and other assets. We have this big FUD happening with the Evergrande kind of issue, the real estate issue within China, and that's most likely going to be resolved with some sort of intervention with Beijing, either supporting the company, doing whatever that they need to do to bring them out of that crisis. Now, I don't know how much it will ripple into, say, North America, so Canada and the United States. It could potentially impact Canada's real estate market, but more likely it's just going to cause extreme sell-offs in the stock market for no rhyme or reason other than just general fear. And that could cause another sell-off for Bitcoin. But over time, Bitcoin continuously trends up. We see that and we know that. And I understand the thought and everyone's thinking, hey, I just want to hold Bitcoin for a couple months, make a little bit of money. But when you think about it, when you actually look at the market cycles and the halvenings, wouldn't it be more advantageous to hold for the long term on most of your cryptocurrencies? I'm not saying that you shouldn't take a profit, but you should always remain in the market in some capacity. I do truly see Bitcoin as the overall asset that's going to save a lot of people in terms of wealth preservation and hedging against inflation in this time. I think right now in history is the most important time to have an asset like Bitcoin. And I think with that in mind, you start to recognize that really these short-term price actions aren't really that important at the end of the day. Yes, we're all going to make some money along the way. Yes, we're all going to take some profits. Yes, we're all going to reinvest it into other projects, but we will all hold a little bit of Bitcoin. And overall, where Bitcoin goes, it's a sign for the general health in the blockchain ecosystem. And you guys know I am not one coin to rule them all. I think every coin has a place to play in the new blockchain financial world, not only financial world, but the blockchain world that we're heading into. This is a transformative technology on the same scale, if not greater, than the internet. It's truly at that level. Hopefully this video kind of helped you recognize market cycles, how the halvening could impact maybe an alternative theory. And I know it's the minority theory in terms of lengthening market cycles, but I do hope at least it got you thinking to the possibilities that Bitcoin could have. Now, again, everything is a theory. Nothing's really set in stone just yet. So we really don't know. And I think that's what's most exciting about this specific market cycle, because we could see it just follow stock to flow, exactly what everyone's talking about, and it just go from there. Or we could see Bitcoin and cryptocurrencies do something that we've never seen it do before and basically usher in a new way of thinking about how the market cycles will work. Again, if you like this content, go ahead and give me a like and subscribe to the channel for more crypto news and content. And of course, happy hodling.